So, Bitcoin is the talk of the town these days, but as we've seen recently, Bitcoin and other cryptocurrencies are highly volatile. Some people are big believers of cryptos, but some others are the complete opposite. Whether you're bullish or bearish on cryptos, this video may prove to be useful for you. In this high volatility environment, here are 5 things you can do either to protect your investment or to profit from your investment. And these 5 strategies I'm going to share are divided into 2 categories. The bullish strategies, that is if you think cryptos will continue to go up, and the bearish strategies, that is if you believe there is a crypto bubble. Without further ado, here are the first 2 strategies for the bullish investors out there. First, you buy the dip. With the large swings occurring in the market, you will see occasions where the asset value drops over 10% or even more in a short period, just like what happened about a week ago or 2 weeks ago. If you have a high risk tolerance and you believe the long-term outlook is positive, then you should buy the dip in order to lower your average cost. Number 2, the buy and hold strategy. This good old strategy is for those who don't have such a strong conviction, but you still believe in the story. So you can just buy a cryptocurrency and hold it for the long term. I mean, it could be 6 months, a year, 2 years. So think of it as a long-term investment. Don't check the price on a daily basis. This will help you keep your sanity. Trust me. And now, for the bearish investors, I assume many of you guys are watching this video to find out how you can profit when the price of cryptocurrencies do go down. Or this might be useful for those who already invested in the cryptos and you just want to maybe lock in your profits or protect your investment. And you might be asking what you can do to protect yourself. Well, here are 3 strategies that I'd like to share. Number 1, short Bitcoin or maybe other altcoins. If you think Bitcoin is a bubble and it will pop shortly, find an exchange that allows shorting. You can Google that to find out. So how does that work exactly? Well, shorting means selling an asset that you do not currently own. So to illustrate, let's say you short 1 Bitcoin at $10,000. That means you borrow 1 Bitcoin, and in this case from at the exchange, and you sold it immediately to Bob the buyer at $10,000 per Bitcoin. Then let's say a day later, Bitcoin dropped to 9,000. Now, because you got a loan of 1 Bitcoin yesterday from at the exchange, you'll have to buy 1 Bitcoin in the market from Sam, maybe one of the sellers, to repay your Bitcoin loan from the day before. The neat thing is, when you buy the Bitcoin on the exchange now, you only have to pay 9,000, which means $1,000 profit for you. So that's how you can profit when the price of Bitcoin or other cryptocurrencies are going down. Number 2, use a stop loss order. If you're not so inclined to speculate and you just want to protect your current investment, you can use what's called a stop loss order. This may be dependent on the exchange you use. Some will offer this feature, but not all do. So you might want to check first before you open an account or sign up for a new account at the exchange. And a stop loss order is basically an order to sell your asset when the price of the asset drops below a certain level, which you set, and this price is called the stop price. So the great thing about this is the order can be executed automatically after you send it to the exchange without any further instruction from you. So let's say you enter a stop order today with a $9,500 stop price, and Bitcoin is currently trading at $10,000. The next day, if the price of Bitcoin drops to 9,500 or lower, the exchange will execute your stop loss order automatically. You don't need to do anything. Imagine the peace of mind that you have when you sleep at night, knowing that if the price tanks, you don't have to be up in the middle of the night just to enter your sell order. So this will protect your investment, and you don't have to monitor the price all the time. And lastly, our last strategy is shorting crypto-related stocks. If you don't have access to cryptocurrency accounts and you can't short the cryptocurrencies directly, here is another way to short cryptocurrencies indirectly. So you will short crypto-related stocks, Bitcoin-related stocks, and currently there are some public companies that are in the cryptocurrency business. And by nature, when the value of cryptocurrencies fell, these companies would go down together with them. Some of the companies may be small enough that you will need to have access to trade pink sheets if you want to short these shares. But there are some mid-cap or large-cap companies that have direct or indirect exposure to cryptocurrencies. To give you some examples, NVIDIA. So they manufacture the graphic cards that miners are using to mine cryptocurrencies. So if the cryptocurrency business is not doing well, it will have some kind of effect to NVIDIA business too. Another one that I can think of is Kodak. A while ago, Kodak made an announcement that they had launched their own cryptocurrency, and the stock has doubled since then. So when this cryptocurrency craze went away, I expect that Kodak shares will also go down again. Alright, so those are 5 different strategies that you can adopt in order to profit or to protect your investment. If you want me to talk further about one of the strategies that I've mentioned earlier, or talk about some other things, feel free to leave your comment down below and I'll make a video of that. Thanks for watching, and I'll see you guys next time.